You're welcome. Today lecture we'll be talking about liquidity. So, what is liquidity? Liquidity is a short-term high or low which stops above or below them. Or liquidity is a short-term high or low with imbalance at the same price range. So, what am I trying to say now? So, this is my chart here. I said for this lecture, I think it will be best to just pull up a chart. So as we're learning, we'll be progressing and all. You get. So basically now this is a 1 week chart. From here, 1 week. That is the W now is week. That is a 1 week. That means each candle here represents a week of price movement. Example, this very last candle here is the candle of this previous week. That is this week of doing this should, as you can see here, Monday 10th of July 2023. That is what is below this place. Then the next one is Monday 3rd of July. That is the beginning of the candle. That is when the candle started. So each candle here starts which each candle here is a week of price movement. If you check out these time frames now, if it's a 1 day time frame you are working on, each candle there represents 1 day. Meaning, if I'm to go to a 1 day time frame, 7 candles, that is 7 1 day candles, will make up this one of a weekly candlestick. I don't know if you understand. That's just basically it. Yeah. So back to liquidity. Our topic for today. Like I said, liquidity is where buy stop is resting below or above a short-term high or low. So for instance, let's go back here from here. Let's start from here. Yes. So what I told you about the last teaching is, let me use this. I told you about our last teaching that how you know a market trend is when, if it's a downtrend, that is a bearish market, it keeps on making lower lows and lower highs. Like, see this now, this is a high, goes down here to make a low, make another high, then this is just a short-term high, like what I was talking about. This is a short-term high, this is a short-term low. So this is the one we'll be using here. Makes another high here, makes, sorry, a lower low, then a high here, then a lower low again, then a lower high, and continuously. So let me change this and make it bold so you can see what I'm showing you here. You can see it right now, right? So this is basically how you know a downtrend, when the previous low is being broken out by an expansion, as you can see here. That is, so this is showing that it's a downtrend that is occurring here. You get. So how will you know what's when we talk about liquidity? Liquidity now is what will rest above places like this. Sorry. Liquidity now is what is resting here. Let me change the color of this also to something you guys will be able to see. This area now is where liquidity is. That's a short-term high. Same goes for here too. Liquidity is resting around this region. You get, this is a short-term high, a short-term low. That's where liquidity is resting. Liquidity now is in form of buy stops. These buy stops are basically where big funds, smart money, well, your banks, big institution now use to place their orders. You get. All of us now are running this market as retailers, but those smart monies now, those are your big industries, your companies that have big funds to raise, and used to enter the market. These points now are where they either place their orders, their buy orders, or their sell orders, or their buy stops or sell stops. That is that region. And markets now, whenever market is moving, it's places like this market will be timing for, to be able to collect those funds that they are using to place orders in the market. That's just basically it. So if you are in a downtrend, market will basically always be going for the sell stops. So what are sell stops? Sell stops are sell stops sorry sell stops are liquidities now that are resting below the market. That's what sell stops are. Liquidity resting just directly below the market. That's what we call a sell stops. These sell stops can be in form of either buy limit or stop loss. Either sell limit or buy stops, like stop loss, in the sense that, let me use this in my chart here now. If for instance now, after seeing this run up from here to here now, this green candle from here to here now, and the market now, those your large funds believe that, okay, this market is going to be running, is going to be turning to a bullish market, what they will do is they will place their buy limit around here, and they will set their stop loss here. You see, that's basically what that's what some of them will do. And as you can see now, because this is a downtrend, as markets portrayed went up here, after they entered the market, a market resisted in this region. That is this region here now. That is this region here. As it got there now, some of them now will want to re-enter the trade again from there, thinking that it's going to be going upwards. Then this area here, that's the wick of that candle, the last ending point. That's where most of them will place their stop loss, that's their sell stops. And markets knowing this now, that is where their sell stops will be residing, we take it out. As you can see, he left the ones up here and he went and he took it out with speed. Check it. So that is just basically how the market will move. It will be attacking sell stops and buy stops. So now, how do you know where the market is going to be taking sell stops and buy stops from? This is where you have to work with the trend of the market, because it depends on what trend the direction the market is trending, that will determine the stops it will be taking out. I don't know if you understand what I'm saying. If the market is going in an uptrend, that is a bullish market, is likely to be taking out buy stops, like what I showed you here now. See now, this is a low violated. Let me take in this. This is a low violated. That was where sell stops were residing. It took it out. Another low that was formed. Sell stops were residing there. It took it out. I don't know if you get where I'm heading to. That is when it was there. But now see, as an uptrend now, buy stops are residing here. If you observe, it's after the downwards push. Sorry. After getting here, went down. That is that above that line now that I drew now. That is where buy stops are, because buy stops are always above of the market, sell stops are always below. So on trying to move up again, it stopped at that same price range of the previous high, not taking it out. Normally, what normal funds people now will do, they will see this as a resistance. We don't work on resistance here. They will see this as a sign of resistance, that market want to go lower. And on seeing this rejection now, some of them now will come and they will place their entry around here, and we start looking for prices lower, or maybe to seek this sell stops here. You get, but market is not doing that because the trend has changed now, is in an uptrend now. If you look to the previous and to your left, you see the boy, you see this previous high now that was broken out. This previous high that was broken. If you remember what I told you in the previous class, where change in market structure, that is when markets, maybe if it's in a downtrend now, is to take out lower, is to be taking out lows, then all of a sudden it takes out, like, not a not it's not a short term high it's taking out, it's taking out a long term high. It takes out the first one, takes out the second one being here, then you know there's a shift in market structure. As you can see, it took it out first on this candle here, just that it was very small, it was not something significant, and it went lower. Still, buy stops will have, from this point here, buy stop will adjust to the high of this candlestick, and market will want to come back up to retest, to clear out those buy stops, which it eventually did. As you can see here, that's what it eventually did. So naturally, with all things being equal, this is where your funds will be placing their sell orders. If they place their sell limit from here, some of them will place from here with their sell stops very close, thinking that this is going to be a downward trend. And as you can see, it first moved in their favor, but it could not get anywhere before turning around to clear out those buy stops above the market. So that's just it. So there are two types of liquidity. We have internal range liquidity and external range liquidity. Yeah, that's what we'll be looking into now. Don't forget here, please, we're working on a weekly time frame. Weekly time frame is very hard to see, to know when the market is changing, due to the fact that it takes a longer period of time to create each candlestick. Yes. So okay, let's drop down to a daily time frame so I can be able to explain it more to you. But first, before I do that, let me clear all these drawings I'm putting on my chart here. I'm sure you know how to use your trading view. Yeah, so before I drop down to a daily time frame here, I want to box out an area that we'll be talking about based on this internal range liquidity and external range liquidity. Okay, we can still talk about it from here. Yeah, so basically, internal range liquidity we'll be using because I would have loved to use from this place here to this area, but since we did not know that this was going to be a shift in market share because it's a weekly time frame, we're going to be dropping down to a 1 day time frame for a clear view from where this orange line starts from. Yeah, so this is where we'll be starting from here. So as you can see now, there are multiple candles now present. You remember what I told you about the weekly candle starting from Monday, I think 10th or thereabouts. Yes, see it around here. This is Monday 10th, and if you check it, this is Monday 10th, Tuesday, Wednesday, Thursday, Friday being the last day. So you can see 5 candles made up that one weekly candlestick. You get? Yeah, so that's just it. 5 candles made up the 1 week. One of the 1 week. 5 1 day candle made up 1 weekly candle. Yeah. So back to our topic on internal range liquidity and external range liquidity. So external range liquidity is when is basically when you are looking for a target. Like now, this is an uptrend now, and we don't know where to target. Basically, this is a very good place here. As you can see, what I showed you before a on a weekly time frame, something around here where it was something similar to equal highs, where liquidity will be resting. As you can see, this is relative equal high. It's not very neat. It's not all the time you see neat highs in a chart, because the market will always want to show you something clean for you to use and get into the market. Again, so this is not far apart from each other. So those are relative equal highs, meaning that there will be buy stops above the market. That's above that price now. The price being the price of this candle, that is the high being 1.22932. That's the high. So there'll be, let me use this one instead. Let me use this, so you be able to, yeah. So that is it here. You can see the price here, 122.948. That is basically where the price last reached. So above that price now is where buy stops will be residing. Yeah. So if you are to, maybe we're around here, this is hindsight. We're assuming now that after this shift in market structure now, where it broke, if you observe on a 1 day time frame, on a 1 week time frame, it did not show this high here. Let me go back to a weekly time frame so you'll be able to see what I'm showing you. So if you see now, see what it showed on a weekly time frame, just a red candle with a large wick. But on a daily time frame now, is much more defined on a daily time frame, where it's showing you exactly what market did, which is it went higher at first, reached a certain price, they went lower. You're seeing this there. They went to take out the buy stops above that high, retraced lower, that is being here. Let me follow it up, see it from here. Went higher, sorry, went higher, retraced. This is a short term high too, retraced. Then took out the short term high, the highs there, the two highs that were formed there with buy side liquidity, and took it out. Then retraced lower before going. This is also another short term high. Then busted out of it. If you observe now, if you look closely, there's also a short term high here which was wiped out. The weekly time frame does not show this because it takes 7 candles of the daily time frame to 5 candles of the daily time frame to form one weekly time frame. So you might not see all this move. That's why if you are analyzing your chart, you need to be stepping down from a weekly to a daily, to 4 hours, 1 hour, and so on and so forth. Yeah. So this is basically what the market did at that point. So let's assume now that we're in an uptrend now. We're in an uptrend. So what is residing here now? What is residing here from here to here is actually like, let me use a candlestick now to showcase this now. Let me use this one being a different color, so we know where we're stopping. So this is a range now where this is the range where this buy stop above here was taken out. Then if you look well on a weekly time frame, We were actually aiming for, I think, somewhere around here. Yes, after this high was taken out, yeah, this high then here. Then if you observe closely, you see that after the high was made, taking out this first buy stops, it retraced lower. And if you check that retracement closely, you see you see that there was a low taken out. Yes, this was a low taken out. And you'll be like, uh that a low was taken out, does that mean that it's turning to a downtrend? No, it's not turning to a downtrend yet. As you can see now, see the low of this candle, see the buy stops of this candle, and see how the candle now stayed in between. Stayed, it's just the wick that came out from that range where the buy stops were. This week now is because of those buy stops that are resting below in that region. Buy stops now are in this region like this, and that's what the wicks were after to take out those, sorry, sell stop, I mean, the wicks were after to take out those sell stops before it continued to move higher. You understand? That's what the wicks were after. That's why if you check it, the candlestick body did not exceed that area. This place now, this, sorry, let me put back that triangle. This region now is what we call an internal range liquidity, because see where we're aiming for. This is what we're aiming for. This relative equal highs that was shown on the weekly time frame. If you see it here, it's still looking ahead. This is a perfect relative equal highs. See it closely. Their lengths are equal. Let me use this instead. Sorry. Look at it now. The highs are equal. They are very neat. It being neat means that there's liquidity resting just above these highs. In this region like this, liquidity is resting around there. So market will want some sort of momentum to use and take out those liquidity now. That momentum market is looking for is what we call an internal range liquidity, in the sense that it will first go down, retrace, watch closely, it takes out this previous low now. After gathering that previous low, that is where sell stops are, sell side liquidity, it uses it to protrude up, see the boost upwards. But on reaching that price now, it starts to slow down, starts to take some retracement downwards. Then if you check market again now, knowing that many people now have entered this trade, keeping their sell stops here, because like I said, the big funds, they will keep their sales just directly below the candlestick. That has been the end of this box now. And if you check, market came down again, because market does not want those people to be in favor. Market does not want to favor them, it wants to deceive them now. And if you observe, took it out again the second time, now. That is taking out sell stop the second time. It's doing this movement now after taking out the big funds first time, second time. What they'll be thinking, some of them will be thinking, is that okay, market wants to go lower. Since a low was formed, it took out there was a lower low formed, now taking out the previous low, and a third low, taking out the initial low that was present there. So what the markets now will be thinking is that okay, since a low was formed, a lower low, then a lower low was formed. That is a low here, a lower low here, then a lower low. That is this low being lower than this previous low. Now maybe market is seeking to go in a downtrend now. What they will now do is, because of this relative equal highs, they will now set their stop loss, that is their buy stops. Buy stops meaning they will sell then they will tell market, if market reach this price now, it should buy back what they've sold. You get? So what basically these are the thing will look like here. Maybe they will just set, as market has done this now, they can set it around here now, and they'll be seeking to go downwards. Meanwhile, they'll be setting their stops, that is, they are just directly above those relative equal highs I showed you here now with this. Let me change the color so you can know it's a relative equal high. That's all relative equal highs that you see here should be red, or no, red is already mixing with this color, so let's just use maybe purple. Yeah, I think purple will be alright. So our relative equal high now is being this purple. So this where market now will be residing their buy stops. And as you can see, if you observe closely now, after market took out those sell side liquidity from here, the time it took, just look at the candles, how it just kept on moving upwards, 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 until the very moment it took out those buy stops resting just above this relative equal high, until it took it out. But if you see when it was going for the sell side liquidity, it was taking time to be moving, but here now it just moved once. Just, it was obvious that it was going for that angle, and before you know it, took it out, retraced for a bit before continuing higher. Yeah, so this is basically what they call, and so here now, this place is here now is what they call internal range liquidity. So let me increase my screen. I don't know if you can see my screen properly. So this place here now is being what they call internal range liquidity. So let me type it out for you. Internal range liquidity. Good. Increase the size. 12. So this areas now is what they call internal range liquidity. So this above this relative equal highs now is what we call external range liquidity, because this was the range. See our range now. This was our range. Let me use this strong line. So from here to here. Hey, sorry. Oh shit, what's wrong with this? From here to here was our initial range. That is the range. That is this price range. Now you can see it's highlighted. That is our price range. But market had to come down to take out a previous low. That is between these two range now, between this high and this low. This low is a short-term low. That is this low. This low here is a short-term low. If you look from this range to this range, that range is a short-term low, and that was what market came for, and tried to take out the external range liquidity, that is our range, but did not take it out, and came down again for another short-term low, being our internal range liquidity around here, before it broke out. So this is an internal range liquidity, that is an external range liquidity. So I think if you go down to a lower time frame, it should be more clear. Yeah, let me delete all this and let's go down to a lower time frame. But I'll still leave this relative equal highs here, so you'll be able to observe what was going on there. Let me leave all these ones, all these hash lines now. Please take note, all these hash lines are where our daily highs are. Let me remove this one and drop it around here. So this is where our daily highs are. Yeah. So let's drop to a 1 hour time frame. That's where the H is. Okay. Okay, so if you look here now, this is a 1 hour time frame. I know it's looking a lot. It's looking like a lot. Yeah, that is basically because now a day time frame now 24 hours. That is this is a 1 hour time frame which each candle now represents 1 hour, and 24 of this candle will represent 1 day. And back on the 1 day time frame, we're looking at a lot of days. So the candlesticks are meant to be very much here in the 1 hour. So we're going to just look at things and wrap them up quickly as possible. So yeah. So if you observe what I was saying before, I think here now it will be more clear since we already know that this is an uptrend. If you observe when you were on the 1 day time frame, it was just a small movement we were seeing here, but now see lots of candles to show what price was doing. So if you look here now, from here to here, let me use a rectangle to draw it. From here to here, this is our price range. Let me take it down to the lower one. Here now is our price range. Let's focus on this area here. So if you observe now, okay, yes, this is actually going to be very nice. At least it's showing all what I'm saying. Here now, from this low to this high is our price range. So let me draw out the candles. Let me draw out a line to show the high. And write it there now. This is our high price. The P, I'm just going to put a shortcut now, doing PR. That is the high of the price range there. As it said, let me see if I can be able to color it a different color. Maybe a thick black would be nice. Okay, now you can see it clearly now that is our price range. And if you observe, this is a low, a high, a lower low. So basically now what you'll be feeling like is meant to go to take out this high immediately, but instead it moves slightly downwards, coming to attack this place here. That is this low here, because this is where liquidity is now, because it knows that it needs momentum to go higher. Market always needs momentum to go higher, so that is why they retrace. They take out, maybe they will take out a low before going higher, or they will take out a high before going lower. Those are like collection of momentum, collection of orders, limits placed in the market to use to move to their main objective. Yes, so this is our price range now. As I said, from this high now to this low is the main price range that we're after. If you observe, that is where we are mainly after, this high now, because that is the yeah, okay, yeah, this high, because of this relative equal highs now. So this is our main price range, anyhow. But like now we're focusing on this small region. If you observe, it takes out the low. Then after taking out the low, just look closely on how markets all of a sudden, see how the thing goes now, goes, touches that region, goes higher here, goes low. After taking out those sell stops, just look at how fast everything here now in this range, just look at it, everything is a green candle. Everyone is a green candle before it comes again, retraces slower, and boom, takes out that buy side liquidity, being buy stops. Can you see clearly now? That is just price. That is what price movement is all about now. Just look at how smooth and with efficiency it moves to take out the highs. Okay. So we are going to be looking at the bigger picture now, being this whole price range, After it touches here, create relative equal highs. Can you see that? Can you see it? Relative equal highs. Now if it was a retailer or a normal retailer or smart money, now due to the big funds, what they will do is that once they see this retracement, they will want to buy here. I don't know what happened there, sorry. Let me do that again. They want to buy around. So if this was to be a retailer, like how all your retails do trade, or some big funds, this is how they are going to do it here, and this is where they'll be placing their stops. Sorry, I'm having service issue now. Sorry, I'm having service issue. Rain has been falling here for a while, so it's disrupting service to a very good degree. Yeah. Okay, back to what we are saying. So, like I said, your retail funds now, what do you see this top place? They will see it as resistance. That is, market does not want to go above there, which is a lie, as we all know it. Like, this is an uptrend. So what markets will do is that they want to take their funds now and start looking for the swing low that is being this low now. So although will say that, okay, that is your big industrial interest, they want to attack that low and be like, that's the next draw on liquidity for the market. And as you can see, pium 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 pium, it does not do that. It just consolidates and boom, it does not do that for them. So how it is this is our range that we're looking at. Markets now, after creating these relative equal highs, that is where liquidity is, the bulk of the liquidity. That is where they are. What market is doing now, going downwards, is people now that are on buy, their stops will be around here, being their sell stops around here, around all these lows they are seeing. That's where their stops will be. You get? So now people that are buying now, that's where their stops will be. What market is doing is it wants to kick them out. It does not want them to catch the main trend. So it's going to attack those stops to kick them out of the market. I don't know if you understand. You're going to get them to kick them out of the market for the meantime. That is, whoever that bought around here now is going to be in soup, because that's where market will be attacking. I don't know if you are following me. Then, as it's attacking here now, it's going to be tricking others to be thinking that this is going lower. As you can see, it's going to be tricking them by creating lower lows. It's going to be tricking them that, okay, price is going lower now. So what to now do is that it will now be making them set their own their own stops above the market now. That is here. So it's doing it in two ways now. Try to take these people out and tricking them that this price now is now going lower. And as you can see now, after creating those relative equal highs now, all this now that the market comes after, all these places now that the market comes after, here, all these now are called internal range liquidity, because this is not where your main aim is. See where you're attacking, but market now is coming to take out that liquidity to use and gain momentum. As you can see, after I took out that last low, see the last low it took out here, and see the gap, see the whole liquidity it packed. And after doing that, it went up, took out those high here. As you can see, it touched, it went down. What it did here now is market price, people now will think that, okay, this is a strong resistance because of this initial relative equal highs now that it have made, that this year is going to also be a strong resistance, meaning that some of them will still pack more buys around here. And what they will not do, they will just increase their stops a bit, and they'll be like they are going to be going down to maybe around this region or something. And you can see the momentum it used to burst out of that whole region. That means no matter how large you want to keep your stop loss, you want to keep your stops, that is your buy stops, you cannot keep it to be this large. So whoever that kept their own to this point now, market has taken everything. I don't know if you understand where I'm heading to. So there now is called an internal range liquidity, this region now, because this is not the main objective for the market. It's in an uptrend, but it comes down to take out lows first before uptrend continue. So that's just what that is internal range liquidity. Let's face another region here again. So from here to here, all this now is happening on a 1 hour time frame. If we were to drop down to a 15-minute time frame, it will be the same thing. Yeah, it will be much more clear. You see a lot of more examples. As you can see on the 1 day time frame, we could only make out one example there, but as you drop to a 1 hour time frame, all of a sudden they are just coming out continuously. So now see it again. This is an uptrend, as you can see. Sorry, this noise. See, it's created a high, a low here, created a high, went lower first. Now these people now be thinking that the market is seeking to go lower, but what it just did now, it just took out the liquidity below the market. Okay, let me do that again. Sorry, it just took out the liquidity below the market. That's just here. You can see it just took it out, liquidity below the market, and went higher. As you can see, then went low again, then high, then low. Then see our objective here. Maybe you missed all this trade now. Yes, as you can see now, see what the market did. If you look closely, it took out this low. What most of them would have done is they would have started selling. Almost will be like, okay, market has taken out, let's look for a sell, and they'll be looking for where to enter and sell. Maybe some of them will enter within this region now as sell, but it kept on going higher, and it will kick them out of markets. As you can see now, after it keeps on going, I see relative equal highs here. It's relative equal highs. Do you see it? That's it. They'll be setting their stop loss. Maybe if they enter from this region, mean this region here now, this is where they'll be keeping their stop loss, this relative equal highs, and nothing will happen, because the market is not going on a downtrend, it's going on an uptrend. So it will attack those relative equal highs and see how the thing busts. So you see the green candle, see the large 3 grey candles you used to bust through it. Do you see it now? So that's just it there. That's it about relative equal highs. Liquidity is always in bulk above relative equal highs, and it will favor you if you know the initial trend. Like if it's in an uptrend and you see relative equal highs, that means market is going to attack those relative equal highs, and if it's attacking it, it's going to be going hard on it. But if it's an option and you see relatively equal lows, it's best to wait and see what the market wants to do first. If you're in a downtrend and it creates relative equal lows before going higher, you know that it's going to be attacking the lower part. That is, it's going to be attacking the downtrend, like those relative equal lows with big momentum. Yeah, so this is our price range that we're looking at now here. Let me get this out of the way. And if you look closely now, this here now is a swing low which was taken out. this swing low that was taken out now is called an internal range liquidity, because it was initially going higher. As you can see, after taking out these equal highs now, it will have going higher. What market now we see, how market we see now after it has taken out that high now, and it starts showing this candle, they will be like, okay, as this is about to go down, they will enter from this place again, set their stop loss above here, making here what, making here have bulk of liquidity, buy side liquidity, and they will now start attacking other liquidity range now that is being here. That is where your industry, your funds, your large funds will start attacking all this liquidity around there. They'll be looking at market to take out all those liquidities there now. But see what market does now, it just takes out an internal range liquidity. This internal range liquidity is just like trying to deceive them that it is going lower. As you can see what it does. It was taking good, it went lower. Then on reaching this region here, that is, let me draw a rectangle to show you. On reaching this region, okay, so we're all the places now that are seeing this red line now is where buy stops are residing. This is where your funds, your retail concept, your retailers will place their buy stops as. So that's basically where it was. And see how markets, just these 3 points now, 1, 2 and 3, just look at how market used only one candle, because of all it has accumulated from here now downwards to this region here, because of all the orders that have accumulated there. It already has enough momentum, and watch as it just use only one of the 1 hour candle to burst through all these stops that were residing in that region. So like I said, this is your internal range liquidity. Let me paint it blue for you. That's your internal range liquidity. And this red that has been the last one is your external range liquidity. Let me paint it orange as your external range liquidity. Yeah. Okay, I remember when we made emphasis on these relative equal highs on the 1 day time frame. That is, let me use a triangle to highlight the relative equal highs here. This whole region here, where it was only showing only 2 equal highs, but now if you look at this, it's not just 2 equal highs now that it's showing, but 3 relative equal highs. That is 1, 2 and the third one, 3. Yeah, and this is that drawing from before when I showed you my internal range liquidity on the daily time frame. So yeah, it was, I think it from the daily time frame, it was from this region here. Let me use a triangle also to highlight that, please. From this region here to there. Yeah, I think so. I think that was it. Yeah, that was basically it. Yeah. So as you can see, we'll be starting from here now. We'll be starting from here and be going up. So if you look now, I think we've spoken about all these places before. Yeah, I told you this is an internal range liquidity. Where's my drawing? This is an internal range liquidity. It's an internal liquidity to continue moving higher. Here to the same thing. Seek an internal range liquidity to continue moving higher. As you can see here to the same thing. 6 an internal range liquidity to continue moving higher. You can see it now. That is internal range liquidity now. That has been from this low now to that high. You can see what is going on. See this place now. Because it comes down to seek liquidity before continuing to the uptrend. same thing happens here. 6 liquidity. It went up from here now, went up, came down, made a low, went higher, created a higher low. Naturally, it's meant to go up and take out this place here, but instead it comes down to seek liquidity. That's the internal range liquidity, and eventually takes out the buy stops above that high. You can see it there. Then a relative equal high was formed. Your retail model will be that is a bearish move, which it was for a while, as you can see on the 1 hour time frame. It was for a while, for a long time. But this is not because they were correct. No, this was because on a bigger scale, from a 1 hour time frame, from a 1 day time frame, this is just one move. If you remember correctly, this was one move that went from down here to up here. This was just all one move. Then I think this was the only low as of your 1 day time frame that was formed, which it went down to seek that liquidity around here before going higher to create a relative equal high on your 1 day time frame. That was what was on your 1 day time frame. So note, all price will be moving according to higher time frames. That means if it's bullish on a higher time frame, it is going to be bullish on lower time frame. You'll be seeing more of this movements here. There's more of all this. Yeah, this is because price now is trying to retest or take out a liquidity on the higher time frame, because it's the higher time frame your large funds use to trade. So it's trying to attack their funds, like their liquidity first, to use it and gain momentum to continue moving in the direction it wants to move. You get? So that's why if it's retesting now on a lower time frame, it look like it's a downtrend, as you can see here, but it is not. So if you observe now, on reaching this spot, on reaching here to seek out this initial liquidity, what markets would have seen, or every other person, what your retail will see, or your large fund will see, that this is a resistance. This is a resistance. So that means market does not want to go below this range, creating neat, again, look at it, relative equal lows. And what happens here? Markets, after creating the relative equal lows, market retraces, goes up. As you can see, it does not okay, it just takes out this buy side a bit, but this is still forming another relative equal highs, and from there it goes down. See the momentum we used to push downwards to take out all the sell stops in this region. It uses it to take out all the sell stops in this region. Just look at it here now. All sell stops in this region has been wiped out by the market, and after doing that, what happens? See the big run upwards, takes out this relative equal highs too. I see it, relative equal highs. Now this is internal range liquidity, and internal range liquidity that formed equal lows, and then liquid that formed equal lows here and here. So you can see it there, and it took it out, and see the big run upwards. See the big run upwards, which eventually formed these relative equal highs that you are seeing here again. That formed these relative equal highs they are seeing around here now. That is where your market will see, okay, so as you can see now, this is relative equal highs formed on a daily time frame. That is what let me change the color of the triangle so you will be able to see it here. So this is not helpful. So this is the relative equal highs formed on the daily time frame. As you can see, that was relative equal highs formed on a daily time frame. It was just two equal highs, But if you look at this 1 hour time from now, like I said, market does not always make the equal highs to be very neat. You can see how many times it reached out one. This is just, let's just use this candle as basically one. These two also that it touched here 2 times. So we'll just crown it up to be two. That is one in inside, one here. Since they are very close to each other. That is two. Goes down, does this massive move, reaches back up here again into this same range. This is also relatively equal high prior to this one because their gap is not much. What people from the market will be seeing it as, what retailers will be seeing as, this is a resistance zone. Exactly, this is a zone of resistance. So those who there now as sell, goes down a little bit, retraces down, goes up again, makes that neat equal high that we're talking about. This is already the fourth time. Sell again, as large funds will be using it. They'll be using this to accumulate sales. So they've sold one, two, three, 4 times now. Goes down again, climbs up back and touches it the fifth time, and this is how you say this is a very strong resistance. And you see some of them whereby they will carry their funds after entering the funds like around 5 times. They will take it down. Let me just say they will go after this liquidity here. Some want to take it higher, that kind of thing. They will be seeking higher liquidity. Since all this run now is here, they will seek liquidity here too. Now this is what they'll be seeing in their own perspective. This is what they'll be seeing. But what us was saying now is that as market now is touching this range, this area continuously, is showing us sign that there will be a very large liquidity hanging around this region, meaning that we'll just have to wait and seek for an entry to use and go long. And whatever long we are going to go, we seek it to break through this region, like largely. You get? So this is how it's going to be now. See, market, okay, yes, went down, goes down to their favor. After seeing this as double top, that is relative equal highs, once it breaks here, because there's a chart pattern that shows that there is a head and shoulder pattern. I said that. That is double top. They will tell you once it breaks the neckline of the double top, you should set your entry around here. That has been where this internal liquidity was. That has been the neck of double top, because this is how the double top looks like. Let me use candlestick and just sketch it out for you. This is just how it always looks like here. You get? This is it. So what they'll tell is that once it breaks, this low, that is, once markets exceed this neckline here, you should take it as you should set your limits here. That is, you should set your limits here now. That is this neckline. Really, it goes outside the neckline. You should set your limit there. Then set your stop loss at the head of this place. That has been this place now, liquidity. So what does that mean? Liquidity will be in bulk there. Then you should seek for, this is what your retail model will show you. Then you should seek for the exact distance, 1:2 or 1:5 of whatever the move is. You get? But see what happens. It just goes outside of that neckline to trick them that this is going to work out for them. As you can see here, it just goes outside to trick them that okay, this is a sell, like this is going well. As you can see, if you look closely, after breaking out, it does as if it wants to retest, but and comes downwards again. See the down movements. But this is all to trick those who are in the market that this is actually going short when the big picture that is on a daily time frame is showing long. This is why it is necessary to always start analyzing your chart from the daily time frame, from a higher time frame, then step down to a lower time frame. Whatever trend that is in the higher time frame, you should follow it to the lowest time frame and be seeking entries. You get? Because if you don't, you might just be here now and in your mind, okay, this is going to work out, this is a double top, this is the neckline is the entry, we should do a 1:2, and boom, it does not even give you a 1:0.5 before going to your stop loss. It just went direct to the stop loss because it knows that that is where because it knows that that is where all the liquidity is. That is where most of your funds will place their buy stops just above that high. As you can see, that's what it does there. So this is just basically it. And they say don't always know your always follow your higher time frame trend. Always, it is essential. Always follow your higher time frame trend. As you can see there now, those relative equalize, this is bulk of liquidity, and it just takes out this low here. This low being that it wanted to trick people into entering market. People that wanted to go short, it was tricking them. People wanted to sell, it was tricking them that this was going short. Then people that were on buy, they will have placed their stop loss, that is in at this range. Now let me draw another track down. They would have placed their stop loss just within this range here, just within that range. That is where those people that entered long now will place, as now start going there, this is where they will place their stop loss. As you can see, it would have hit here and it just went down and started clearing out all of these, because it wanted to trick them that this is a short, we are going short, there's a change in market structure, we're all going short, all of you should follow up. Whoever that has stops there, buy stops, sell stops, sorry, that's people that were long that had sell stops there. As you can see, it was triggering them out of the market, kicking them out continuously, because it did not want them to catch the initial trend, which was up. As you can see, kick all of them out of the market, saying they don't want you in the market. We don't want you to catch the big move. We don't want you there at all. And also tricked sellers, that is people that wanted to go short after breaking below here, tricked them that this was going to be going short, and all of a sudden, boom, 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 all relative equal highs were wiped out. And see the gap it used to wipe it out. Just look at the gap it used, wiped it out, went inside, used it to retrace, took out some people again that were long. Like I said, liquidity, it's all about seeking liquidity. See all these people that were long to this region, took all of them out. Even this region, okay, this region were not people that were long in this region now would have been saved. As you can see, it does not reach there. But even though they've been long here, some people now, what they'll be doing is that they'll be shifting their sell stops to all this region here. They'll be shifting their sell stops there. Maybe the main one can still be around there. Some people must have entered here. Some people now, even though they entered there, they will shift their sell stops here, and you can see, because of this was where most of them shifted their sell stops to, these regions here. So what happens, just clears everything out. After clearing it, it continue going higher, took out this is also a relative equal high. Like I told you, it's not all the time you'll be seeing neat relative equal highs. This is also a relative equal high, just that it is not neat, it is a zone. See it there, took it out. See another internal range liquidity, like I said before, working from here from here to here. See it now. This is a low that was being formed here. See this low here. As you can see it there, that is low. It came down to take out that low. See the retracement, took out the internal range liquidity before going for the external range liquidity, that is relative equal highs again. But wait for this external range liquidity. I see what happens here again. Like I said before, see this relative equal highs here. 1, 2, 3. So what happens here again? This is relative equal high because it's not always neat. Let me use a triangle to draw it instead. It's not going to always be very neat. It's going to be clear and nice. The market does not always give that opportunity to make it neat, so it to be obvious. They always want to do something like this to trick you to thinking that it's not the same. So see what they did here. First one went down, wicked up, touched it, went down, took out liquidity, took out internal range liquidity. As you can see, what people will be thinking are okay, this is a short equal high resistance. Some of them now must have maybe placed their stop loss, their entry around here. Their entry be around here now. Set stops maybe here or a lower 1:2, as they say, 1:2 or 1:3. But you don't know because of they are in the wrong trend. All this is nonsense because they are in the wrong trend. They are not following the right trend. So as you can see, relative equals now. Where they will set their stop loss is just above the side. People with large funds will have entered 1, 2, going short. It will be moving in their favor as first. See, after taking out the internal range liquidity, because this was all what it was after, this internal range liquidity, but because of it knows that it was in an uptrend, it had to leave some liquidity up here that is making you think that it's going lower. They went after this liquidity down here, taking out buyers from the market, that is taking out sell stops, because it does not want them to catch this big move that is going to be occurring. Yes, and it wants to trick sellers into thinking that this is a sell. So at them now they'll place liquidity up here, and that is what to use to continue its momentum. And as you can see, after taking it out, it went up. See the big move it did upwards, retraced a bit, took out some lows here. So it again took out another internal range liquidity here again. So it's here. Let me zoom it closer. Prior from here to here, this is a low internal range liquidity. See it, took it out. See the week it used to week, and after taking it out, boom, touched here. Buyers, your retail model will see this now as strong resistance because market has hit here 2 times now, and they will see this as a very strong resistance. And what most of them will do again, as before it even hits, some of them must have already placed their limit, their sell limit, and maybe just give a good stop loss place here, and they'll start attacking all these sell stops, all this liquidity here that are hanging below all these relative lows here, below all these lows. They will have been attacking all those places, and what happens? It goes in their favor at first. That's because it wants to trick them to keep on pressing sell, and after all that, boom, see the big move up. Clearly, everyone that will be, no matter how big, how gap you want to leave your stop loss, the liquidity, your buy side liquidity, that is your buy stops now, saying maybe the market will dig in a bit and retrace down. No matter how large you want to leave it, the more you keep on increasing it, the more the market keeps on taking it. So that's basically it. So yeah, that is just basically how market runs for liquidity. It just uses what the money, the big funds people are going to be placing their things, and it's using it against them. But they are not the ones moving the market. The market is being moved by algorithm. Yeah, because the algorithm already knows that okay, this is how they are thinking. This is what they think they'll do. The smart money people will do, and what we just do is just the exact opposite to kick them out of market, collect their money and all, and move in the direction it wants to go. It is not because of the smart money are pressing buy that is buying. It's not because of the large funds, sorry, are pressing buy that the market is buying. No, it's because the algorithm wants to go there to these areas now, because they have something that those large funds kept around those places, thinking that it will go short. Now it now wants to go and take it out to prove them wrong that they are not going short. Yeah, so that is basically all about liquidity. You have to, in summary, you have to follow your higher time frame trend. You can start from a weekly time frame to a daily time frame to 1 hour. Then you can also drop down to 15 minutes, like down here now. If you check all my stars, I have 1 week, 1 day, 4 hours, 1 hour, 15 minutes, 5 minutes, 3 minutes, then 1 minute. You can use all this and be stepping it down, just depending on how deep you want to go. Whatever I thought tonight is the exact opposite for a downtrend, but still, I would still like to show example later on about the downtrend. Yeah, this video has already taken so long, so yeah, this is basically all about liquidity. Always follow the big picture. Yeah, thank you.